this video, I'm going to go through how Leon, a Croatian villager, went from an $81 payout to now over 1 million in live funded capital. And that's max allocation with FTMO and all of these payouts in 2026 alone. Yes, this guy right here. He was living with me only a few weeks ago in Thailand, trading with me in real life. I'm going to expose the mechanical strategy he used. This exact strategy right here, we are going to break down today. Then I'm going to go through the back-end scaling plan. This was what determined what Leon was spending his payouts on, where to put them in the market, what prop firms, and how to effectively spread his capital. And lastly, the glue that sticks it all together, the diversification and the DCA plan. I'm going to go over all of this and more in great detail today. This is going to be a value-packed video, so I recommend you either get Apple Notes up or a notepad and pen, however you work best. Prepare yourself for a few minutes, pause the video, get locked in, because we are going to blitz through some life-changing stuff today, as it changed Leon's life. Okay, so stage one in this video, let's go over the mechanical strategy that Leon used to take the winning trades that ended up passing his funding and getting him payouts. Okay, so I found a fresh day with a trade that Leon took. This exact trade, Leon profited 3 risks to reward on, and it went exactly like this. Stage one, you're going to want to mark out your session times. So we've got midnight for Asian Open, we've got 8 AM for London Open, and we've got 1 PM for New York. This specific version of this strategy, Leon only traded during London session, so that's the example that we're going to go over. Step one, you need to install the fractals indicator by Rachel T. This is going to outline the break of structure points that we are going to be using on the 5-minute, the 15-minute, and the 4-hour. So very important stuff here. First of all, once you've installed the fractals indicator, head over to the 4-hour time frame and find the most recent break of structure. In this case, the most recent time that we've had a break of structure was right here, because if I find the nearest fractal, I go across, there's been no BOS there. Then I go to the next one, no BOS there. Then the next one, and the next one, and the next one, until, and this isn't a BOS by the way, because this hits a wick with a fractal on it, which counts as a unwall bangable surface. If you know, you know. So this is the most recent break of structure, meaning our bias is bearish. Because if our most recent break of structure was to the downside, our bias is bearish. If it was to the upside, our bias would be bullish. So I can put ORD with a nice red tag there. And if we go now onto the 5-minute, which is where we're going to be executing, we want to mark out previous session highs. Now, previous session highs are right here, okay? And if we actually lock exactly onto that, and if you want to learn how to lock on a MacBook, hold Command, on Windows, hold Alt, and then Shift is a straight line. So we've got right here Asian highs. So we're going to wait for Asian highs to get swept. They got swept right here. Now, after Asian highs have been swept, you want to look for something called the fake out confluence, okay? This is a TMB exclusive confluence that we've mechanicalized, and it goes something like this. Once the sweep happens, you need to wait for a candle to form in the direction of bias. So since we are bearish, and I'll put a down arrow here to signify that, we are going to be looking for a bearish candle to form on or after the sweep. That bearish candle has just formed there, as you can see. Now we get our fib tool, and we want to put it on the previous plus current session range. So from the lowest to the highest, because we're selling, this is the way we do it, we have now created the fake out zone. Now within the fake out zone, we usually have a situation where a candle body will look like this. It will close just outside the fake out zone, and what we're looking for is any candles after that to tap this blue line, and that would be the fake out confluence confirmed. However, in this case, the candle that's formed the fake out zone is within the fake out zone. So if this next candle printed where the previous one left off, we would automatically be in the fake out zone, and therefore we would automatically fake out, which isn't much of a confluence. So we do not do it that way. We apply something called the manual fake out now. So what I'm going to want you to do is step one, get the Gann box and measure up the entire candle body. Now, if it's a small candle, you're going to want to zoom in so you can get precise with this. Now, you want to mark out either the 66 or the 033, depending on how you draw it. But I do the 066 and I go from the top of the candle to the bottom in the case of a sell. And I want price to tap this blue line. This is the new fake out zone. This is called a manual fake out. Boom, we've tapped that blue line with the candle following. So we can now move over to the next step of the strategy, which is the confirmation. Now, we're going to be using those fractal points once again as break of structure points for this strategy. So I'm going to wait until we get a candle closure below one of these fractals, like we've just had right here. So this is a break of structures to the downside, which is almost our final step on this strategy right here. We are then going to be getting out the fib tool. Now, it is really important that you pause this video and copy my fib tool settings. This will be for the fake out, and for the entry, okay? We are going to be using either the 0.618 or the 5957, whichever one you prefer, but in my data, the 618 is superior. So I'm going to measure up now the high of current session to the lowest point made after the break of structure. This is going to be for my entry. I'm putting my limit order on the 618 black line here, my stop loss above the 1.025 mark, and my TP fixed 3 risks to reward. This is the exact strategy Leon used to scale. Now look at how precise this taps the limit order. Boom, right in the zone, right here. And since we set and forget on these positions, which is so important, we are not taking out for any reason other than news or the weekend. I don't care if it's a 2.9R reversal or if you're in 1R profit, there is no moving to BE, there is no moving the stop loss, there is no moving the take profit for this specific trade. We are just going to be setting and forgetting, and we did end up hitting a nice 3 risk to reward take profit. Now you can obviously trail on these positions, we do trail as well, but there has to be specific requirements for that, and I'm not going to go over that in today's video. So this is the mechanical strategy Leon uses. 4 hour for the bias, 5 minute for the entry, fib tools, fake outs, break of structures, in the order that I've displayed today. Now we can get over to the really interesting stuff, which is going to be the back end plan. Okay, so we've just done the mechanical strategy. That is the mechanical strategy. I've given you a bearish example today. Before we go over the back-end scaling plan, I want to touch on the diversification and DCA first and leave the scaling for last. So the concept of diversification is splitting up your capital into different buckets. Okay, so you have your capital here. In Leon's case, it wasn't a large amount. The wage in Croatia is very low and the payout he got was very small. But because he had the correct diversification and DCA setup, his capital was able to be distributed effectively and efficiently. And this is exactly what he did. At first, he was honing in on just one model. It was called Mech London TMB. This was where most of his capital was going because he didn't have enough to split it up into the 3 buckets. Bucket 1, Bucket 2, and Bucket 3. He was only able to put his capital into Mech London, which can work. Having only one variable can work, but you are all in on one set of probabilities. So what Leon did was he diversified his pairs instead. He was trading 4 different pairs for Mech London. So he had 4 different pairs that could be profitable. Now this was pretty high trade turnover, but it worked for Leon. The next step in his diversification plan was he went with the LRV, which is the low R variation. Okay, now this model provides a lower risk to reward, so it has a higher win rate. Similar to the TMB model we showed today, just a little bit different. Okay, so this was our base level model where he had most of his capital. Then we expanded to the LRV, and then we added in the hybrid, which was the final step in the puzzle. The bias is different, but the risk to reward is the same. Now this is now 3 separate chances at profitability. And with prop firms, you don't lose when your balance decreases. Your balance just decreases because it's a simulated environment. Let me give you a great example of this. Let's say you've got 300K past accounts. You've got 1 allocated to LRV, 1 allocated to Mech London, and 1 allocated to hybrid. Let's ignore all of the individual probabilities of each model because obviously I could go deep on LRV being a more stable climb because of the higher win rate, lower RR, larger loss streaks for Mech London due to the trade frequency, but higher pull-ups due to the RR, hybrid, lower trade frequency, still high RR, so a mix of both worlds. We can go into that all day long, but let's not talk about that, it's boring, okay, for now, and it's not the point. The point is, if we had 300Ks, 1 on each model, and let's say we went on a 5 loss streak on the LRV and a 5 loss streak on Mech London, and we were risking 1K. Our balances on both of those accounts would be down 5K on each. So we'd have 5K remaining. We haven't lost 5K. Our balances are down 5K. And let's say we have a 2 win streak on the hybrid, getting a nice 6K balance, risking 1K. After fees, if we pay that account out, we've made 4.5K. These challenges costed us 400 each. Can you see the ROI? Can you see the game we're playing? And that's not even factoring in, what about if all 3 models win at the same time? This is why we split up our funds in between different probabilities. Because I just want to take a 30-second break to tell you how well and how proud my trading group has done. The TTC, the Trading Club VIP group, this year in 2026 has accumulated over 180K in prop firm payouts. Yes, 180,000 in payouts. And here is just some of them, all on screen right now. Here are some of the payouts that we've accumulated as a group. This is inevitable for us because of what I'm going over in this video. So you really need to make sure you listen to the value here because I'm leaking VIP source completely for free. But if you do want to change your life in as quick a way as possible, I get it, there's good value on YouTube, but we really put it together for you and personalize it for you inside the VIP. If you are interested in changing your life, working with me directly and traders just like Leon, and Leon himself, check the first link in the description, book a 5-minute call, it won't be long, we'll map out what we can do for you and if we can even help you. We might not be able to help you as a trader, or we might be able to change your fucking life. So check that first link in the description and let's get straight back into the video. We are hedging against the uncertainty of the future, and that is the key. That is the key for all of this, and that's a philosophy that I bring with me throughout my day trading. It's, I don't know whether the LRV is going to perform this month. Same with Mech London, same with hybrid. I can see the data, but I can't see the future. So what we do, we split up our capital between each model. And this is the most efficient way to scale because you are less likely to get damaged by an individual probability, and it's way better for your mental as well. So allocating our funds evenly between slight different model variations, having different strengths in between the two. Like I said, if you only have a small amount of capital and a small amount of time, because trading other models takes more time, you want to streamline your focus to just one. And that's what Leon did originally. He just streamlined his focus to Mech London, and eventually when he had room, capital-wise, and time-wise, he scaled into the hybrid and into the LRV. So in terms of diversification and DCA, you want to buy accounts frequently enough, weekly basis or a bi-weekly basis, or even multiple times a week to get the highest chances of passing. Let's take a quick screen grab of this hybrid data and let's paste it in, and I'll show you what I mean about buying accounts frequently. So if I bought an account right here, and with my risk setup, I need a 9 risk to reward gain without losing 6.5 trades in between. So if I buy one account, I've passed that account here. If I then wait to buy another account here, I've then passed that account here. But what a better idea is, because this is the mainstream narrative of I'm going to buy an account, sit on it, maybe buy another in a couple of months, or wait until I fail to buy another. What about if you bought an account every week? Then you're stacking up your odds. If I'm buying an account here, and here, and here, and here, and here. And if we go back to the data, every time you've had a 9R gain from when you bought your original account, you would have passed. So if I'm buying an account here, 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 and my risk to reward, because my winning strategy works, is only going up over time, by the time you get to the end of the year and I've gained 56 odd risk to reward, all of the accounts that are 9R behind this, in terms of when I bought them, so all of the accounts bought from here before, any accounts bought from here, I wouldn't have failed, I would have passed. This is why we evenly distribute our capital throughout periods of time. So we hedge against the uncertainty once again. Same with Mech London. If I'm buying accounts here, 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 all I need is a 9R gain to pass. So obviously I wouldn't have passed any accounts here because the RR is break even, but I would have passed all the accounts before 11R. So all of these accounts I would have passed. Maybe I would still be stuck at break even with some. Of course, bro. You're going to have a tug of war with some accounts, and some accounts are going to pass in a 3-win streak. That is the game. Welcome to it. You need to set your expectations correctly. You're not always going to buy an account and land on a straight 3-win streak. Sometimes you're going to land in a loss streak. You might even fail. If I would have landed here with slippage, I could have failed an account. Whoop-de-doo, I'm buying loads of accounts, okay? So up your expectation in terms of what you need to buy, okay? And that's that DCA portion. But we've gone over now the diversification, we've gone over the strategy, we've gone over the DCA. Now what I want to go over is the scaling plan. And this is what contributed to the payout section. Of course, getting the funding was the DCA and the diversification. Getting the wins was the strategy in the front end. But scaling up to the payouts, that is where Leon used the scaling plan. Now, what is a scaling plan? The scaling plan can be summarized in 2 sections: risk and payout balance. That is it, okay? But designing the scaling plan is going to be heavily based on how much funding you've got, your risk tolerance, and your current life situation. So it is very person to person dependent. But for Leon, what he wanted to do was go low risk on the first couple of accounts he got. So let's say with Leon, he got his $81 payout, he bought a few 10Ks, scaled them up, ended up getting some payouts of ACG. This was just in 2026, but he got the payouts originally in 2025, okay? And what he did was, he wanted to risk a lot lower on those live accounts with 10Ks. I myself, on a 10K account, I'd be risking $200 or nothing because I don't care about a 10K account and I'm happy to risk high for the chance to get a high ROI. He didn't want to bite that bullet and he didn't want to take that risk because in his situation, a 10K account meant everything. He had no money. He had to play it safe. So Leon was risking $75 on a 10K, built that up to a 6R payout. 6 risk to reward payout. This is what I consistently advise Leon to do. A 6R payout, get some money off the platform. Don't run it up. There's no need. Get money off the platform, buy bigger accounts. And this is the theme with Leon's scaling plan. Get money off platform, buy more accounts. Don't get greedy. He never gets greedy. He never ever gets greedy. This is one strength of Leon's. He is very, very good at just taking money off platform, buying more and bigger accounts. Look at these payouts. They're not crazy numbers, but they're very frequent. This is a theme. Not crazy numbers, but very frequent. Look at this is all on the 8th of Jan, 8th of Jan, 8th of Jan, 8th of Jan. Because he's paying out and scaling up. He's not getting greedy. He's not going down a rabbit hole of trying to run up an account to 50R. No, 6R and gone. Okay, granted, as he's scaled up to over $1 million in funding now, me and Leon have spoke and he's gone with a similar approach to me. Some accounts high risk, some accounts low risk. Obviously, you're going to risk diversify when you get more in funding. He's happy to do that. I'm happy to say that he should be doing that as well. Granted, bro, for me, on those 10Ks, for instance, $200 risk. On 100K, 0.75, but some I'm risking higher because I have 1.7 million in funding as we speak. And obviously at my peak, I was at 2.6 mil. So the scaling plan is very dependent on your personal situation, because if you have loads of capital coming into trading, you're not even going to care about a 100K account. You can happily risk 1% and you won't care if you lose it. But if a 100K account means everything to you, you're going to want to risk a lot lower, like 0.5, 0.75. So this is all I wanted to go over today, gents. I've broken down, obviously, the strategy, the back end, the scaling, the diversification, and some stuff with Leon. Hopefully you enjoyed this video. Comment if you are in the free Discord. If you're not already, join the free Discord. I'll pin it in the comments below. In TTC, we do 10 live trading calls per week and an education session on the weekend, all to make sure that you get the most value as possible and you make the most progress as you possibly can with day trading, transferring my knowledge to you. If you enjoyed this video, leave a like, leave a comment with any other video ideas that you want me to go over. And with that all done and said, peace, love, and unity, everybody. I'll see you boys in the next one. Hopefully you gain some value from this, because I know Leon changed his fucking life this year and last year, and I just wanted to share that with you. Peace out.